What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's time for the weekend, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we have major news out of Apple. We've got major news from Microsoft and Activision Blizzard. We have a lot of news from Tesla, so we better not waste any time and kick things off like we always do with Meta Platforms. Started the week at 122, ended the week closer to 116. That's down about 5.6%. This is after the company started a trial on Thursday against the antitrust regulators looking to block their virtual reality within app acquisition. This was an acquisition that was made for about just $400 million, and this was when Meta was worth probably closer to $1 trillion rather than about $300 billion today. Now, this lawsuit has a lot of implications, not just for Meta and building up its business, but I think for the antitrust regulatory process going forward. The FTC is claiming that Meta is making this acquisition in a market that it doesn't have a dominant position in yet, but if they're allowed to continue to make these types of acquisition, they'll eventually create a monopoly. So we'll see how the court sides. This is in a San Jose courtroom. It is expected to go about 8 days, so into next week. CEO Mark Zuckerberg of Meta expected to testify as well. Now, Facebook is threatening to pull news content from its U.S. platform. This is as a bill is making its way through Congress. It is referred to the Journalism Competition and Preservation Act. This would allow journalist outlets and publications to collect more and more revenue from Facebook. A similar law was attempted to be passed, if you recall, in Australia of last year. Meta ended up negotiating with the Australian government to kind of skirt that regulation. We'll see if something like this comes, and if Facebook pulls the news from its platforms, might create less problems when it comes to, quote, misinformation on the platform. Moving on to Apple, started the week at 150, and this one's having problems, down nearly 5.5%, finished the week closer to 142 on Apple. This is after Credit Suisse cuts its near-term Apple iPhone estimates, but it's staying bullish. Obviously, we'll get to why those Apple iPhone estimates are starting to come in. When I come over here and look at analyst estimates for the first quarter of 2023, that's the upcoming quarter for Apple that ends in the end of December, revenue estimates at $124 billion, but we're seeing that the trend from analysts continues to walk that back, as obviously when you go over to the country of China and the manufacturing capabilities over there, you have a lot of problems over there. The Foxconn founder urged the Chinese government to remove its zero virus plans. Difficult to really get a gauge on the situation over in China, but it appears that maybe those things are starting to walk back a little bit. Apple's manufacturer partner, obviously Foxconn, ended its closed loop system in its Zhengzhou iPhone plant. Although we've constantly seen this over the last couple of months, it kind of starts a closed loop system and then ends it. And so we'll see how that materializes. Taiwan semiconductor manufacturer based in Taiwan, but obviously has a little bit of Chinese risk there as well, sees $10 billion in revenue from its Arizona plant. The president, Tim Cook, many out there for the groundbreaking on that plant. Taiwan Semiconductor actually lifted its chip investment to nearly $40 billion in that Arizona plant. Again, a lot of news kind of came out this week on this, but we're not expected to get mass production out of this facility until 2024. Now, Apple may increase, and I would say they probably are definitely going to increase their iPad production in India as they continue to shift away from the country of China based on a lot of different reasons. But I personally think this is obviously going to create a little bit of cloud over Apple stock. It's going to create a cloud over revenues and earnings. But one good news is Tim Cook has a lot of experience in this. And so I think the right person is leading Apple if they're going to get through this time of uncertainty when it comes to manufacturing. Now, Twitter is reportedly going to raise the price of its Twitter Blue service, which is, I believe, $8 per month, but they're going to raise it on the iPhone by about 30% to about $11 a month to make up for the fact that Apple has a 30% quote tax on any transaction that moves through its system. I think what's going on over at Twitter is going to permeate throughout the rest of social media. I know there's a lot of criticism on Twitter. A lot of it comes from people that don't have a business background, don't understand what's actually going on there. And I guarantee you, this time next year, you're going to be paying for your verification on Instagram and Facebook and other social websites as well. And then what we're also going to see with other people is if you go to Twitter's website, you're going to get a 30% discount when you renew. You're going to see that from game makers. You're going to see that through anybody that is subject to that 30% tax, probably even Netflix as well. Now, Apple is working on a new encryption system to keep away hackers and other data protection. Now, this is interesting because Apple has kind of run into some of these, I'll call them quote, problems in the past where maybe you had a criminal use an iPhone and obviously the government, the FBI, they want Apple to unlock that phone or allow the government or the law enforcement agencies to get into that phone to help them solve a crime. Well, these new encryption systems would actually make it impossible for Apple to do that. So you might have one of these cases, and it would be tragic if it happens, where you have the FBI or the DOJ or somebody having a press release holding up an iPhone saying, hey, this will help us solve a case, but because of the encryption, we're not able to get into it. Obviously, from a privacy perspective, very, very good, but also could create some quote negative PR situations in the future when it comes to Apple. Now, the company is also pushing its self-driving car launch to 2026, but still eyes a major EV industry disruption. This car was maybe anticipated sometime next year, maybe without a steering wheel, maybe with full self-driving. What we're seeing across the EV landscape is Audi shelved their full self-driving. Apple is pushing back their car. Ford and GM are still having manufacturing capability problems pushing out the EVs. There is one company that is pumping it out. Elon Musk said on Twitter that Lucid company is basically not longed for. He's basically calling for the end of that company. The competition in this space is withering on a vine, and I think that's probably longer term pretty darn good for Tesla. Moving on to Amazon, start of the week at $93. This one down big, about 4.75%. Finished the week closer to about $89 per share. This is after Amazon, Google, Microsoft, and Oracle shared a Pentagon contract worth about $9 billion for those cloud services. We'll have more news on that when we get to Google. Now, Amazon is facing further regulatory pressures, and it sees a spike in website outages. I tell you what, this spike in website outages, probably bad for AWS in terms of its reliability, but it could mean that Amazon is just getting a bunch of people on its site and maybe other people that are using AWS kind of putting a heavy load on those servers. So it could be good from a sales perspective if those people end up coming back and putting their orders in. But we've got a bevy of regulatory from Washington, D.C. to out here in California. A lot of it relates to kind of third-party sellers over at Amazon. And just being a third-party seller on Amazon myself, I think Amazon is actually guilty of some of these things. They'll probably have to pay some fines and tweak some things, but in the long run, I actually think it'd be good for the company. Now, One Medical, an acquisition that Amazon is attempting to complete. It was actually a public company. That stock is ticking lower on the surprise news, and that is totally sarcastic, that the FTC is maybe doing an inquiry to potentially block that deal. I tell you what, every single deal, it doesn't matter if it's a $400 million deal or a $4 billion or a $69 billion deal, the FTC is just on these companies' backs. I personally don't like it, but I can understand from a regulatory perspective those that want to see big tech kind of reined in. Well, you got the perfect person in charge in the White House and the FTC at the current time. Moving on to Netflix, started the week at $321, dipped down, but had a nice rally over the last couple of days. Finished the week basically flat at about $320. This is after Wells Fargo upgraded the Netflix stock, citing improving churn, which is the amount of people canceling and kind of resubscribing to the platform, and they see a stable subscriber base. That is something that we're seeing probably as well. I think more positive to Netflix in the longer run is, first of all, they're already profitable, which is they're like the one streaming service that is actually kind of churning out a profit. So it's actually really impressive what they're doing. And we obviously saw the return from Disney from former CEO Bob Iger. He's back. He's going to start to raise the prices. Disney Plus is going to offer an ad-supported tier at $7.99. That's $3 less than the ad-free version. He's probably going to drive up the pricing on those other subscription models over the next couple of years as well, because he's looking to drive profitability off of Disney Plus, which is currently losing money. That is good for Netflix in the longer run. And the Netflix has a co-CEO, but he's looking for growth to rebound in 2023, as 2022, as we know, was kind of a flat year from a revenue and a subscriber base growth for Netflix. Moving on to NVIDIA, started at 167. This one's chugging right along, up about 1.5 to $170 per share. This is after Apple. NVIDIA, as we talked about in the Apple segment, will be the first customers for that Taiwan Semiconductor and Arizona plant. Obviously, a lot of news coming, but again, 2024 is when this factory will meet kind of mass production, but it should be beneficial for those companies. Semiconductors decline earlier this week, though, as the Intel CFO says visibility isn't very pristine in terms of demand and supply chain heading into the future when he's talking about Q1. My guess is Intel, you just have crappy products, and there's a lot of competition out there as well. And so obviously, I think we'll see some volatility with these names. I mean, semiconductor stocks having volatility, not really breaking any news there, but we'll certainly keep a close eye of that here on the channel. Moving on to Google, this one was way higher. Started the week at 101, down 8%. Finished the week closer to $92.80 per share. This is after Oracle and Google were seen as a, quote, shining like a bright star in that $9 billion Pentagon deal that also included Microsoft and Google, and of course, Amazon as well. Now, they said this is a shining star because, you know, look, Google and Oracle in particular kind of looked maybe it's kind of like third, fourth place when it comes to Amazon and Microsoft, and it's probably still there. What this is showing me, though, this is probably more detrimental to Amazon, as I think over the next couple of years, you're actually going to see cloud pricing probably come under pressure. And as we obviously know about Amazon, is they rely on the profits from AWS to really make up from the losses from their other business. What we know about Google, though, is their Google Cloud business doesn't make any money, but Sundar Pichai, as we'll talk about here in a minute, driving more efficiencies, and so maybe profits on the ways. Now, in terms of Waze and Google Maps, they're going to consolidate as of today. Those two companies, or those two business units inside of Google, will combine, and Sundar Pichai's goal and mandate to make every business unit inside of Google become 20% more productive, I think is going to pay off for Google in the longer run. Moving on to Microsoft, got a ton of news out of this company as it started the week at $252, down about 3%, end of the week at about $245 per share. This after the company raised the price on its Xbox games, essentially matching rivals like Sony PlayStation. Now a game, instead of costing you about $59.99, will set you back about $69.99. That's pretty expensive. Now, Microsoft offered earlier in the week Sony a 10-year access deal for its potential Activision acquisition, which would give them the rights, or basically give them the game of Call of Duty. Now, Sony appeared to basically not accept that offer and say that's not necessarily good enough. And so that triggered Microsoft to reach a deal with Nintendo, a 10-year deal for Call of Duty, which I would guess on the Nintendo platform is probably a much smaller game than it is for Sony in terms of the game itself, but also all the little add-ons and those types of things. And basically what that did is it made the FTC sue to block that Microsoft $69 billion acquisition. We figured that a decision would be made sometime after the election. Here we are about a month later, and the FTC is going to sue to block this. I read a lot of commentary on this, and for the most part, it's mixed. I saw some analysts saying that, look, Microsoft doesn't have a great shot at getting this just kind of through the finish line without giving up a lot of concessions when it comes to making sure all the games are released across platform, the pricing is the same, the release date is the same, and we'll see how much Microsoft is willing to bend in this case, because again, there is a $3 billion breakup fee. I know that sounds like a lot of money. It's actually about $4 per share for Activision Blizzard, but we can bring up Microsoft's balance sheet if we wanted to. $3 billion could fall off the balance sheet, and it's not going to make that big of a difference. So we'll see how much Microsoft is willing to bend, because that's typically how these things work out, they don't really often go to kind of a gavel ruling from a judge. They tend to be negotiated over the period of time. So if Microsoft's willing to allow Call of Duty to never be exclusive on the Xbox or those types of things, we'll see what happens. It's interesting because I know that Sony and Microsoft, they don't really make money on the Xboxes and the PS5s. It's the games, it's the downloads. So I wouldn't necessarily understand why Microsoft wouldn't want that game being played on PlayStation or being accessible on that platform. We'll see what ends up happening here. Now in the hands of corporate attorneys and the government attorneys, and we'll see how this thing shakes out. You're probably looking at something that'll stretch out well into 2023. Google and Apple's mobile search is in sight from Microsoft as they want to create a new super app. We see a lot of companies. Elon Musk has talked about this. I've heard fascinations from tech companies over the years. They go and look at China, and there's WeChat, where you basically do everything on WeChat. These companies have a fascination with creating a shopping, a messaging. Basically, everything goes through their little fingertips. It's not going to happen here in the United States. WeChat exists in China because of the government control that that country has on its companies. It's not going to happen here in the United States. Moving on to Tesla, start of the week at 189, down about 5.5%. Finished the week closer to 179. We got more details on Tesla's China sales. They delivered 62,000 cars. That was a big gain over the previous year. But what we saw, that exports fell by about 30%. Now, I'm not trying to make excuses for Tesla, but some of this might have to do with the fact that Tesla was making cars in China and then they were exporting into Europe and other countries as well. Well, that Giga Germany factory has been kind of ramping up over the past year over at Tesla. And so my guess is they don't need to export as many. Here's the other commentary that I heard about China over the weekend when I listened to a podcast about China, is that the consumer in China is really stretched now. They are savers. They don't take out a lot of credit and mortgages and finance a lot of things like you see here in the United States. They're kind of cash buyers. And then obviously over the last 2 years, they've been stretched because they haven't been able to go to work as much, maybe make as much money. So they burned through their savings. So you should see probably a pullback in China. That obviously is lining up with other rumors that we're getting out of Tesla, as they are going to cut back on their Model Y production out of that China facility, maybe as much as 30%. That is definitely going to weigh on Tesla's stock, and they are also looking to maybe potentially shorten shifts in that Shanghai factory, maybe even postpone a hiring push, again, as the country of China kind of braces with the COVID policies that they've had over the last 2 years. But on top of that, the consumer there just a little stretched from a financial perspective. Now, this was a very interesting story, as Musk and bankers are looking to maybe add Tesla margin loans to cut Twitter's debt. So I believe when Elon Musk bought Twitter, he acquired essentially $13 billion of debt onto the company. And that adds up to, massive interest rate on that debt, $1.2 billion in annual interest. So you're looking at $100 million a month just in interest on that loan, not even to pay back the principal. And so obviously Elon Musk is looking to maybe cut that back. So they're potentially going to do a margin loan based on Tesla shares. Now, this can go either way. Obviously, as we know, Tesla stock, very volatile stock. That's not going to change, especially if something like this is going to happen. Now, what is this going to make Elon Musk do? And anybody that's kind of bullish on Tesla, they are going to start pumping this even harder because they need the price to stay up, and obviously go even higher would definitely help out those margin loans. Now, the downside and the risk is really bad, even more severe with Tesla, if the stock obviously drops to a certain level where these margin loans actually get called. Well, that could be disastrous. I personally like that. This is why you're an idiot if you have a large percentage of your portfolio tied up in Tesla. I see people saying it's 30%, 40% of my portfolio. Now, look, it might work out great, okay, but the risk is also very, very great, but there's room in portfolios for risk. Obviously, if you're closer to retirement or in retirement, maybe not, but any younger investor, these are kind of the risk I like. Now, Tesla enters Thailand with obviously its two biggest models going head-to-head with Japanese rival. The country of Thailand is looking for at least 30% of vehicles produced in the country to be electric by 2023. And obviously, if we look across competition, Tesla very much willing and able to produce plenty of cars in the country. Moving on to the technical segment of the show, kick things off with the S&P 500. It's always, look, technical patterns, it's not perfect. It's not an exact science, but I tell you what, when it works out, I'm always like, wow, it worked out perfectly. We talked about for several weeks here on the show as we made these bounces off these October lows. We talked about how, look, the momentum's in the stock market, and we talked over the last 2 weeks where we were going to run into some resistance here, and that's exactly what happened, and we've pulled down. Now, what we're monitoring really over the next, probably the next 30 to 60 days is, do we come back down here and retest the October lows? Do we go back and kind of confirm that this downtrend is intact? I tell you what, if you come back down here and back test something to this lower trend line, you are coming way down. I mean, we're talking south of 3,300 on the S&P 500, which would be like a 20% drop. That's kind of your downside risk. The other thing that we're looking for is maybe just look, the shorter term trend is still very steep and it's very much an uptrend. If you get positive momentum, we're really what we're waiting for is we're waiting for a break above this black line, and very solidly, not for a day, not for 2 days. You're looking for probably several candles up and above this trend line, would show you that we finally done something different from the beginning of the year. So until then, I'm assuming that at the very least, we're probably going to back test to 3,600 on the S&P 500. That would be what, another 10% down. And then if it really goes bad, then yeah, I would anticipate a pullback even further. Again, that's what the technical charts are telling us. We don't have any clarity which way it will go, but if this technical pattern continues to hold, and it certainly confirmed that this week, that purple line is what we'd anticipate, not in the shorter term, but over the next probably quarter or so. Moving on to Meta. Now, this one, again, technical pattern very much held true. Exactly what we kind of talked about last week. I have this black line in here. This is a pretty hard resistance level. It was obviously support in the past. Once the stock got over kind of this 120 level, 125 level on the stock, I mean, it didn't even look back. But more recently, obviously, this stock kind of came up, hit its head on it, but you're still in a very shorter term trend. You're very steep on this one. So a pullback was absolutely given. We'll see if the momentum comes back. Meta really needs to get above 125. I mean, that kind of goes without saying. If you do that, you test this upper green line, just like the S&P 500. We're really looking for kind of a break above it, not necessarily like all at once, but at some point you're looking for that. If you're looking to buy Meta, I would be patient right now. I would see if this kind of shorter term momentum off of that 125 resistance level pulls you back to the bottom of this channel. Anywhere on the bottom of this channel, this would be about south of $100 on this stock, could be a buying opportunity, likely from a fundamental perspective, but also from a technical perspective as well. Now, Apple obviously under a lot of pressure. The dominant trend right now, and the trend that is dominant, I'm going to change this to maybe like an orange line, is this orange trend line right now. Okay, we still though have this purple line down here where we have kind of higher lows, but being confirmed by very steep lower highs. We are consolidating right here, and so we're looking for this one to break one way or another. If it breaks, or when it breaks is probably a better way to say that, we're probably looking at something very steep. With Apple, it would push you back into this lower consolidation area. I added a new purple line here. You're probably looking at 123 all the way down to 115, but essentially anything south of about 130 on this stock could be interesting. Again, this stock is going to be under pressure really probably for the next 12 months from a manufacturing perspective, unless things really kind of clear up in China from a visibility perspective, which I don't necessarily see. And even if it does, they're going to be transferring manufacturing capabilities to India. And then obviously they're working with TSM to start making chips here in the United States. The margins, the lead times, all those types of things, going to take some time over at Apple. Now, on the bullish side, you break to the upside, you still have overhead resistance at 149, overhead resistance at 156, and you've just failed to get over that. I would say the least past of resistance for Apple is actually probably down on that one. Moving on to Amazon. Chart finally loaded. Look, we're in the middle of our kind of green consolidation box between about 80 and 105 on this one until you kind of break over 105, or maybe potentially break even lower on Amazon. It's just consolidating in this box, and from a technical perspective, doesn't really have a direction other than in the shorter term definitely down. Moving on to Netflix. Netflix is what you hope all these tech stocks start to break out, maybe sometimes next year, maybe towards the back half of next year. This is kind of what my thesis is that a lot of these stocks, they have obviously this tragic drop from Netflix, but at some point they find a bottom and then boom, they reverse. This one is just looking beautiful from a technical perspective. It absolutely wants to close this gap that it made, and I guarantee you Meta is going to do this. A lot of these stocks are going to do this. They're going to close these gaps. Netflix closed this gap, should have this very, very strong overhead resistance, basically right where the stock is right now. So I wouldn't really chase this stock. You should see a pullback in this stock. Any pullback south of really 300, probably more specifically like 280, definitely can be a buying opportunity if you believe in the story and believe that trend can continue with Netflix. Moving on to NVIDIA, still looks good. Okay, shorter term trend is rapidly rising upwards. You back tested to the top of the channel of the previous line. This is just performing perfectly from a technical perspective. Wouldn't surprise me, honestly, if this name could get all the way back to these highs that it made kind of earlier this year in June and August. That would take you up to about 190. We would expect this stock to give some of it back at some point, as long as it didn't dip back down below the previous lows that you made back here in October. Well, you've got the kind of the emerging of an uptrend, kind of a rounding formation. This is what you're hoping for with most stocks. Fundamentally, though, stock's wildly overvalued. Now, moving on to Google. This one had a pretty massive pullback this week. Obviously, as we see here with these very steep red candles, it also, very similar to Meta, had a very pretty thick resistance line. This one's even more clear than Meta's. Up here at about 99, right at about $100 even at Google. It met that resistance and just got swatted like a basketball. Shorter term, this one definitely looks like it wants to maybe retest this channel low here. That wouldn't really be something I'd be overly concerned about. Another place where I think you could accumulate shares. Again, you're banking on with Google at some point the CEO's able to drive those efficiencies, drive 20% cost reduction. That will maintain profitability, but then you're looking for kind of a rebound when it comes to online advertising business. Obviously, Google well positioned to capture a lot of that growth in the upcoming year when and if things turn around. Moving on to Microsoft, this one's still above kind of the middle of the trend. The middle of the trend is this orange line. We're pretty well above it. You're really looking for this one to basically look like NVIDIA, get above this upper red line, start pushing higher. You could get up to 270, maybe as high as maybe 280 before you reach some kind of cross price resistance. The other scenario is very similar to maybe like Google, maybe even like Apple as well. You get rejected at this level. You come back down here, retest the bottom of a channel, or at the very least retest these lows. Right now, not really seeing any definition from Microsoft. It's in this channel until it is not. Moving on to Tesla. This one is just desperately, it's like trying to hold on so hard to about this 180 price tag. Anywhere between, we'll call it 170 and 180 with Tesla. Not really concerned. You really, though, need to see this one pretty soon find its footing here and make its way to the top of the channel. We talked about this several times here on the show, that if you can go from where the stock is right now, we'll call it 180, up to the top of the channel, it's at least a 35, maybe as high as 40% move on the stock. And that would just be basically continuing the technical pattern. Okay, this looks very much like the S&P 500, where you kind of bouncing off the lows and testing the highs. That's basically what Tesla is doing. Now, the downside is that level doesn't hold, and then you kind of dump out the bottom, and kind of the bottom of that range will take you down to about 135. That's about a 25% drop. So you got, in my opinion, from a technical perspective, you got 40% upside and maybe a 25% downside. Look, this is a volatile stock. It probably could do both of those things in a pretty short period of time. And certainly if they tack on margin loans to Elon Musk ownership in this company, well, I tell you what, Elon Musk is going to be pumping the crap out of Tesla stock, because there is no way in heck he would want to get margin called out of his ownership of Tesla and get a bank to own it We'll see what happens there. That was the FAANG Stock Recap Show for Friday. Hopefully you guys have a wonderful weekend out there. We'll be back again soon. We got Adobe earnings next week. I know it's a little quiet here on the channel. We go through about a month period of time where there's no earnings. There's, I'm not trying to pump out videos just to pump them out. I don't need to rely on this channel for income or anything like that. I really want to put out high quality videos, but we've obviously got a slew of earnings starting basically towards the end of December, but more in January. So we'll be seeing a lot more of me then. But until next time, we'll see you again soon. Good luck with your investments.